I'm Deborah Borchardt, and this is your midday market update. Well, we're finally getting that selling that a lot of traders have been hoping for. Not down horribly, but we did get some jobs numbers this morning. Not great, not horrible, just a little disappointing. So here we are with some selling going on. I'm joined by Alan Valdez from DME Securities. So Alan, we do have the big non-farm payrolls later this week. Today's job report, not horrible, but it was a little disappointing. Are we finally just exhausting that buy the dip mentality?
You're 100% right. Here we are in June. It was go away in May, but now it's go away in June. We saw the last few days. Normally, bad news is good news for the market because it looks like QE will be continued. But this time, jobs trumped it. I mean, the volume's light. If you look at the internals, down volume's almost 200 million, up volume's only 40 million, but still light volume. But I think what's worrying some people is that, jobs really are the most important thing. QE, of course, helps the market, undoubtedly. But for the general economy, you need those jobs. If you look at last month's jobs, even though the number was much better than anticipated, if you break it down, over 75% were in Walmart and McDonald's. They were just those service jobs that don't pay. And that's the problem. That's the quandrum we're getting. And if you look at inflation, inflation now is not the lowest in a year, not the lowest in 5 years, the lowest ever. And so it's teetering on deflation. And so now, what are the Feds going to do if they pull back and this doesn't work and things do, tank? Because if you look, interest rates have ticked up a little, but still, inflation is just a little over 1%. That's the lowest reading ever. So, I mean, it's a problem. What are the Feds going to do? You can see when they talk about pulling back, the whole market collapses here and abroad. Are they at the end here? Are they about ready to say, well, you know what, this is not working. What do we do now? So I think that has really traders very worried. Now with this jobs number, it actually trumped the QE.
Well, and as you brought up, there has been, some selling going on. But, everybody's been very worried about taking those sell orders and putting them through because every time the market was pushing back up. Now, if we do kind of come through with this negative news on jobs, which could mean, perhaps we're just not growing as strongly as we had been, that, again, it may be time to really hit that sell button because this buy the dip mentality looks like it might have exhausted itself.
Well, we were up 18% at one point, closing in on 20%. It looked like we were going to hit it. I'm still in the camp that we'll probably rebound. I mean, this is such a news-oriented market, too. Remember, light volume. If the volume today had been really strong and the market was down 100 points, then you'd say, okay, there's more to it. But it's just like the computers maybe taking a rest. We'll have to see. We saw yesterday the market would tank, but we closed off the lows. We're off the lows right now. So we still have a few hours to go to see what happens here. But so much of this is computer-driven. But I think Friday, you bring up a great point. Friday's number could be critical for the rest of the summer because July and August are dead months anyway. So this is a big number. Not to mention, in 4 more weeks, we get end of the half, end of the quarter. Those are huge numbers coming in there. We'll watch them carefully, that expiration coming up at that time, because after that, the summer's flat. So we'll watch them carefully. But you're right, this may be a time when traders are going to say, let's get a little off the table. We're up 18%. Let's take some money.
All right, well, there you go. We do have a little bit of selling going on today, but so far we don't have a confirmed correction in place. That's Alan Valdez from DME Securities, and I'm Deborah Borchardt with The Street.